Thank you. Ceann Comhairle, I welcome the opportunity to speak to this bill and the credit guarantee scheme more generally. It now sounds almost trite to say that we're in unprecedented times, but the only way we'll come out of this on the other side of the crisis by marshalling and investing and an unprecedented level of state resources. In doing so, it's important that we ensure that the state response is targeted, is ambitious and is evidence-based. In that context, I believe there's a role for the state-backed loan scheme, but it should only be one aspect of a much larger suite of measures. These loans may be suitable for a number of companies, but others may require additional supports and others may well require grant aid. The aim should be to achieve a job-rich growth where there's good quality, secure employment. So while I see the potential in what's being proposed, there are still a number of outstanding issues and important details that have not been fully provided and which I would like to see teased out, if not this evening, certainly over the next day or so, before we come to finally decide on this. While the wider economy and access to credit for small and medium businesses is vitally important, it should never be the limit of our concern. For me, the benchmark by which we must judge all economic response to the COVID-19 pandemic is our ability to protect people's jobs and their livelihoods. I certainly don't want to see a situation where this stimulus goes on, for example, paying rents and inflated rents at that. It has to be a stimulus, and that means money in cash registers, money in people's pockets that actually gets spent. According to the Department's report on the final quarter of last year, only 64 loans were drawn down at a total value of just under 15 million. The Department's estimates this resulted in 1,057 jobs being maintained and an additional 274 jobs being created, a total of 1,331 jobs, an increase in shared liability of just over 11,000 for every job that's either created or maintained. That being said, these figures also serve to demonstrate the major issue with the current scheme, which I fear may be carried over into this one. Since its inception, the take-up of the credit guarantee scheme has been constantly sluggish. Indeed, the 2013 independent review of the scheme noted that the numbers of jobs created and maintained were significantly below the scheme's target of 1,000 per annum. But this was actually disproportionately high given the generally low levels of uptake of the scheme. So it would be very interesting and very important that we understand what the target is in terms of jobs, because there has to be some linkages between both. Given the new and uncharted waters businesses are finding themselves in, it's hard to see the current proposal that it goes far enough to address the issues and bring uptake of the scheme to the levels envisaged. But again, if you might outline what the ambition is. It's possible that the removal of the portfolio cap may be a positive step towards addressing this. The current scheme has a portfolio cap in place, limiting the state's exposure to 13% of the loan facilities. The Department has indicated that the removal is necessary to ensure that lenders provide the necessary liquidity, but there is also evidence that this aspect of the existing scheme has given rise to the banks refusing to lend to some small businesses and applying unsustainable level of interest to others. So that's going to be very important. And one of the things about the microfinance scheme, for example, if we looked at trends, is how difficult it was for young people where they didn't have collateral. And, well-educated, good people, good ideas, shouldn't be prevented from taking a risk and creating new jobs. The banks taking a conservative approach there could be very problematic, particularly when we don't have the safety net or the safety valve of emigration. It's a cohort of people we have to be very conscious of. However, reading the quarterly reports, it's difficult to see how this alone could be the root cause of the low levels of loans granted under the scheme. Between beginning operation in 2012 and the end of last year, there was only 730 loans sanctioned, with a cumulative value of 122 million, but an average loan size of just under 170,000. So even with the removal of the portfolio cap, I don't see any evidence that the Minister will be delivering a scheme that will be so attractive to business that the level of funding he is proposing is warranted. In the limited time available to the House to consider this bill, I would appreciate if the Minister would provide details of the business case for the level of funding he is proposing to attach to the scheme, and the expected number of loans his department are estimating will be sought and delivered by the scheme before the end of the year. There's no point in having something really, ambitious in theory if in fact the reality is very different for people who may well want to take it up. For me, the crux of whether or not this scheme is fit for purpose, that is the crux of whether it's fit for purpose. It is well and good to throw potential liabilities on the balance sheet if you know that they'll never become real. We have to look at what's being offered here and ask ourselves, what is the real potential liability of approving this scheme, and if you were a manager of a struggling business, would it meet your needs? And I think that's where we're going to have input, and maybe ongoing input about how it's working, because it is only one part of a number of initiatives, but it does tie up a sizable amount of money as well. I must be clear, I'm not opposed to the 80-20 split with the banks taking some of the risk. I understand the arguments for the 100% state-backed loans, but I also see the Tánaiste where he's coming from with regard to the shared risk being a disincentive to reckless lending. However, I don't think the trust but verify approach to the banks is good enough. We have all got very strong memories of how the banks conducted themselves, and none of us feel any great degree of confidence in how they will treat this loan, because we're asking the same people where we can see that there wasn't a change in culture over the years. I've got to say, I think I'd be surprised if everybody is not making the same point. Maybe they'll surprise us. I hope they do surprise us, but it has to be one that we're concerned about. We heard last week the statement from the Chief Executive of ISME that he believed this scheme would have very limited take-up because the targeted businesses were understandably completely debt averse. And part of that is that people are concerned. I've heard that repeatedly myself, about people being concerned about, not having the capacity to take on more debt. The Tánaiste told RTE that the loans provided by the scheme would be on a much better terms and conditions than those currently available. But the global pandemic and economic crisis, any level of uncertainty is too much for business, and this lack of clarity, is something we should be concerned about. I'm of the opinion that the interest rate should be as low as 0% for the first year at least, regardless of whether we take on the 100% of the liability or split it with the lender. The state is still shouldering the majority of the risk, so the citizen should reap the majority of the reward. So it's important what the money is loaned for as well. And as I say, I think the important thing is to have the objective is that we're going to end up with good quality jobs that are either created or are maintained. That is, after all, the basic foundation of banking. They take on risk, with a view to receiving a reward. It's a calculated gamble, but where the deck is entirely stacked in favour of the lender. With this in mind, I'm concerned that the scheme doesn't go far enough to ensure the ongoing lending of the banks. My understanding is that they will continue to apply their normal underwriting decision-making processes to the applications, regardless of the reduced risks they're taking on. Maybe you could address that particular point. In normal times, this would be a challenge to business in the midst of a potentially global credit crunch. It may be an insurmountable bar for struggling businesses to overcome. And I would have friends that have small businesses, and you're wondering if they're going to be able to stay open, listening to some of the challenges that they're facing. Indeed, there have been occasions when businesses have felt that their applications have been unfairly treated. This scheme will be time-bound and available until 31st of December this year, yet the Taoiseach does not expect it to be up and running until September, October. This leaves a very small window for businesses to make their applications. Maybe I'm wrong on that, but that's my understanding of it. But it's not clear if there's an appeals process, if any will be put in place. Under the current scheme, if an applicant is unhappy with a decision, they must follow the lender's normal appeal procedure and have the option to escalate the matter to the Credit Review Office. The Review Office currently average processing times to deliver an opinion is 4 weeks, and we're in very tight timeframes here. I'm concerned that the lack of a speedy external appeals process will leave applicants highly vulnerable to an unfair lending practices, and I particularly point to younger people from that point of view. The level of uncertainty surrounding the operation of the scheme is a cause of great concern. Without the interest rate and the approval critical being criteria being set in stone and fully negotiated, essentially we're leaving it. There's a lot of uncertainty. I mean, the scheme has been set out, but it's the behaviour in terms of how the scheme will be operated that is something that there's a degree of uncertainty about. In addition to the unspecified level of interest, there is also a guarantee premium attached to each loan. I'm glad to see this will be paid to the state and at a reduced rate than the one currently in place. Under the current proposals, the rate for SMEs will be 0.25% in the first year and 0.5% in years 2 and 3, with 1% for the remainder of the loan. The Department's information on the current credit guarantee scheme states that the existing premium is paid by businesses as a contribution towards the cost of the state providing the scheme. Even at the lowest cost proposed by the government, this premium could serve to generate significant income for the state if anything approaching the full value of the scheme is drawn down. But there's a doubt about whether it will be, but it's one to keep in mind. Is it the Minister's intention that monies generated from the premium will serve any specific purpose? Will it be ring-fenced? Will it go back into it? What is the intention? Will it cover administrative costs? Once again, I'd appreciate if there is a business case available that we can see to see how this scheme was worked up. You've dealt with the issue of fisheries and agriculture earlier in your speech. I'm just wondering if the current scheme there is a prohibition on freight transport for vehicles, other areas. You might address the areas that are going to be included that in the new scheme that aren't in the one the one that's been we're debating. I would have to say I have some concerns in relation to how we're handling all of this. I completely understand we're in unprecedented times. I completely understand that there's time limits here, but I think it shouldn't go unsaid that there is a degree of speed with this that should be causing us some degree of concern. Indeed, like the amount of time that's available from the time the bill was published to the time you can put in amendments wouldn't be the norm, and I think it's important to put that on the record. You know, and at the same time accept that there is a degree of speed needed. Businesses and their workers throughout the country need help and support to make it through this crisis. The full scale of the economic impact of the pandemic has yet to become clear, but what we do know is that we need to act now and to take bold steps to protect jobs and support Indigenous industries. I believe the state-backed loans have a part to play in achieving this, but we have a responsibility to make sure it is done in the right way. The proposed scheme has the potential to help some businesses, but it carries many of the hallmarks that held its previous incarnation back. The reforms to the existing scheme which are being proposed would have been welcomed in a period of normal economic growth. However, they do not appear to be they do not appear to fully recognise the unprecedented situation many businesses are finding themselves in due to the circumstances completely beyond their control. And I do recognise that this is one of a number of measures in saying that. The fact of the matter is that many businesses have racked up significant debts trying to stay afloat during the lockdown, taking on additional debt, regardless of whether or not they are state-backed, is just not a viable option or anything near the current rates of interest. I'm highly concerned that the proposed scheme will not have the uptake necessary to warrant tying up 1.6 billion, and that prevents us from doing other things if that is the case. I mean, will you be looking at that, you know, in terms of the drawdown, in terms of the timing, to intervene at an early stage if it's clear that this is not going to be fit for purpose. Fundamentally, however, I believe we can't make an accurate assessment of the scheme's potential effectiveness in the absence of that kind of information. We don't know the level of interest that will be charged. We don't know the terms the banks or the conduct of the banks. Would it have been possible, for example, I'm sure it would have been possible for some of the state agencies to more directly, involve themselves in that, like the IDA, like Enterprise Ireland, in terms of actually dealing with it directly, as opposed to the banks having that responsibility and having it, if you like, they have a jobs focus. And they know what it takes to create jobs and maintain jobs. The bank has a different remit and is looking at risk. I'm not opposed to the scheme in principle, but I can't stand over any measure that the main beneficiary will be the bank profiteering, and that is something that that can't be allowed to happen, and that has to be monitored very carefully. A more ambitious approach, for example, would be to build an element of social value into the application criteria of the scheme, and I would have liked to see that done. And if it's going to be reviewed, that's something I think that should happen. The state was willing to take on, if the state was willing to take on a more active role in assessing applications, it could prioritise loans which would create jobs, which is the point I was making about the IDA, Enterprise Ireland, and so on. It could, or it could protect those jobs that already exist in vulnerable communities or vulnerable sectors. There is more than one way to achieve the goals of the scheme, and I wonder what, if any, consideration was given to alternatives to this scheme. Was time an aspect of this? I'd urge the Minister to present the business case for the scheme alongside the full details of the terms and conditions you're seeking to agree with the banks. It is essential that's done before the House votes on this bill, so we can be fully informed on in fact how that scheme is going to play out. Thank you.